JB Cycles here with an update on January the 22nd. So I've been down all week with a cold, but I have to do a video. Better now. So as you see, I've drawn two scenarios here. Still, my main scenario is we should crash down into the summer, but all this has a big triangle feeling. You know, we have the 200-day moving average going down. We are trying to break it, and below we have the 42-month average, which gives us support, and this converges into a triangle, and soon we either have to break up or down here. And my cycle, you know, it has been suggesting downside starting a year back ago, and potentially we could go down into around the summer, but the bear market can stop earlier at any point here. If we start to break out to the upside here, the bear market is most likely over. And we have this kind of irregular bear market bounce where we, you know, normally this would be the bear market rally top, and we should have started a down leg. And when we bounce back up again, either it's not a bear market rally, it's a bullish rally, we are about to establish an uptrend, or the bear market, the down leg hasn't started yet. I think the critical signal here would be whether we make a higher than the top here in December. So let's have a look at some cycles. Starting with, I think, the 16-week cycle. So actually it's the double of the 16-week cycle that has been dominant for many years. It's about 33, almost, I think, 34 weeks long, and I have drawn this in red. This what used to be the larger dominant cycle, but at some point here it was rather the half or the 16-week cycle that became dominant. So you see here a cycle low, but here we didn't have a clear cycle low. This and this looked more like a cycle low. This is hardly any low at all, and we have a cycle low here and here in the middle of this larger one. Anyway, I have some things pointing to that this still may be a dominant cycle, and we should look for a low around the summer. But as you see, this dominant 16-week cycle is at its cycle low now. We should start to rally soon, and that would give us a bullish breakout here. So if we are to continue the bear market here, this next bullish phase here has to fail. We have to see two of these cycles merge into one, and you could also call this kind of an inversion then. We are at the cycle low, but market could be at the top. So I'm just speculating here. You know, this doesn't look very bearish to me. It looks like a bullish setup. So, you know, we should respect this bullish phase coming up here in February, but it may fail. Also, I would like to look at the quarterly cycle, and that one also has a more dominant double cycle. So it has more clear deep lows around March and October. As you see here in March and here around October, this was around March, around October, around March, around October, and then the next one around March again. But the cycle right now is still trending up into February sometime. So both these cycles, they look rather bullish. It's not a very obvious bearish setup here. We could also then look at the 10-week cycle. That one still suggests some downside. And I think this one is strong enough to it should take the market down somewhat here. But that could be a kind of a longer bullish consolidation here before we break out. And all this seemed, the critical time here is the next 1-2 weeks, and that's of course when we have the Fed decision next in about 1 week, 10 days, early February I think. So all this bear market, almost all of these turning points, they happened either at a Fed decision or when the what are they called? The minutes were released. So always around some kind of a Fed announcement, and that's looks like that's about to happen here as well. Around in a week time, we could, inflation going down. Is Fed about to pivot? We could rally, or will the Fed shock the market? We have my 1 month or 4 week cycle. It is still bearish for about 1 week, but this doesn't look like a very bearish 4 week cycle. Unless we start to really crash down here, it looks like we could have a higher low than the previous one, and then we have a bullish phase coming up in early February. So unless the Fed ruins it, it is a setup for a bullish breakout. I don't like it because I'm still bearish, but these signals I'm seeing here, it looks rather bullish. In the hourly data for Dow Jones, it looks like we have finished a 2 week oscillation and about to start a new one, and we are making a higher low, and we could rally here this coming week. It's not a clear bearish setup, but we could, if we stagnate, if we go sideways here 1-2 days, it will be a setup for a bear flag or shoulder, and then we could go down to lower lows here. But this 2 week oscillation has to be sabotaged. It has to be bearish left translated. So it could crash down on Monday, but I don't have a clear setup for that. And as I said, the 4 week cycle, that one is pointing down still a bit, but it doesn't look very bearish. So also, the most similar bear markets, when I compared aligned by my 7-year cycle from the 70s, that one started the capitulation phase right now, and we have from 2001, 2002, we had this irregular bear market rally that failed and also started the capitulation phase right about now. Well, this one was a couple of weeks forward in time. So I'm still leaning to the bearish side, but honestly, objectively, a lot look bullish from here. So we have to see what will come.